All right. Welcome back to the Junius Maltby channel. We're live. We'll get going here in just a minute. It's going to take a while for all of you to fill into the chat, so we don't want to start right away. Today's going to be fun. We haven't done one of these in a while. I do one every couple of years where we talk about the costs of mining, the production, the supply. That's something that's often overlooked. The origins of the precious metals we often discuss in Sound Money. How is it that these metals came to represent labor? Well, it's pretty obvious. There's a tremendous amount of labor, costs, infrastructure, and logistics that go into the production of precious metals, whether it's gold, silver, platinum, palladium, copper, you name it, lead. If you want to get metal out of the ground and refine it and get it to its pure state, usable, and to where it can be applied to its purposes, whether money to circulate as it has for 7,000 years, or to be used in a solar panel, wiring, you name it. The metal has to be dug up by men and refined and then distributed. There's a tremendous amount of infrastructure and layers and layers and layers of work in handling the production and the costs of bringing these metals to the point where you're sitting there holding them. So I see you all in the chat. I'm going to say a quick hello to our members, Highlander Stacker, Aloha Stacker. Good to see both of you. I'm glad you've got your little silver coins, your American Silver Eagles next to your name. Carlos Danger, we are ready to roll. Somebody disliked this video already. Yeah, it happens. There's a lot of those clowns out there. I don't know who they are. But today's going to be fun. We haven't done one of these in a long time. I'm kind of pumped to do it. And this is the organic nature of this channel. These, a lot of times when I present material, it's because it was something I genuinely was looking up for my own interest. I didn't really have the intent of producing a video on it. And then I find myself thinking, oh, you know what? I think Highlander Stacker and Carlos and Aloha and all those in the chat would probably appreciate this type of information. Physics Hypernova, another member of the channel, throwing it down. Good to see you, my friend. Good to see you. So what we're going to do today is I've got a lot of links pulled up because there's a lot of the last year's data from different mining companies. Endeavor, Hecla, First Majestic. First Majestic is the one that's up. That should be a familiar name to you because that was part of the whole controversy with the Wall Street Bets guys. They were trying to pump this stock up. So years ago, I did a video on the all-inclusive costs per ounce sold, the cost per ounce sold, the different expenditures required to produce silver. And it's interesting because those numbers change globally. They change by region, which mines you're in, what country, what the environmental reparation costs are. Of course, every nation has its own labor laws. There's different labor costs. So they average them out. Some of these mines actually have mining sites in various countries. And they kind of just present, they have to for their shareholders and such, what the costs of mining silver is. And in doing this, I came across a lot of different information. Again, this was quick research, so you're going to kind of like just join me with it. Some of the stuff I haven't perused thoroughly. I haven't gone like real deep into every single one of these pieces of information and articles. So I want you to just kind of walk with me. We're going to take a look at a couple of different things. If you've never done this before or never looked at the cost of mining silver, there's certain terminologies. If I have to, I'll kind of take a moment to explain it when we come to them. Some of them I have to look up on my own, like they're new to me also. And this is fun. So get yourself a silver coin. All of you. If you're in the chat, I'm going to give you all a moment. Go grab yourself an ounce of silver. If you have one in your pocket, pull it out, put it in your hand, put it on the table. You're going to look at it when we talk about this. It's important. And I'm gonna just do a quick introduction here as I'm waiting for the chat room to fill up and gather. I know there's still some of you getting in there. And hey, Urigas de la Rugas, my friend. Good to see you as well. Another member. Got a lot of members in the chat this morning. Have you ever tried to mine? Let me ask you that. Have you ever tried extracting precious metals and finding it? Just getting it, finding the location's hard enough. That's the research, the development, the exploration phase of mines is difficult. I'm not a mining company, but I've panned and sluiced for gold, I can tell you that. And finding the right locations is enough work in itself. There can be a tremendous cost there. Once you find sites that have ore or you have placer gold deposits, In this case, with silver, you'd probably find hard rock mining or a vein someplace. And silver's more difficult because it has to be extracted from ore in areas where it's contaminated with other elements and other metals and such. So I would say even with gold, when I find placer gold, it's a lot easier. I've never even tried to find silver. I don't think I could. Honestly. And I don't think I'd be able to get it to the state where it's at all remotely pure, like when you find placer gold and it's in that like 90% phase, because gold doesn't like to mix with other elements. It kind of tends to keep to itself when it's in the wild. The thing is, even with gold, as easy it is to find it in an almost pure state if it's in the placer side of things, the amount of material, dirt, and rock that you have to move and dig and displace is extremely difficult. And even if you're using machinery, it's difficult. And if you use machinery, what do you need? You need oil, gas. There's costs there. So there's human labor, gas costs, fuel costs, shipment, transportation, maintenance on equipment. All of this plays into the extraction and refining of precious metals. It's quite difficult. And DW as well. I've said hello to almost every member of the channel. DW, I just saw you popped into the chat as well. Good to see you. So there's a lot of costs in producing precious metals. It's hard work. I've done some of it myself just as a hobby, and it's not easy. So you want to consider that. And the more you look at history, the more you look at mines and just the production of precious metals throughout human time, you'll realize there's an extreme toll, human toll, and on the bringing metals to the surface and refining them and purifying them. So the first thing we'll do is I just wanted to show you this backdrop here. We'll come back to this article. So I was doing some different searches, and there's some quick facts that came up in looking at this. And here you see the first one of the Google searches I did in doing this, and I just wanted to keep this screen up so you could kind of see what I saw immediately. And this is the link to First Majestic if you want to look at that later. But this is their total cash cost per payable silver ounce. Included estimate royalties and 0.5% mining environmental fee. That's like the reparations, I believe, cleaning, making sure the water in the area stays clean, runoff, because they don't want the runoff entering pure water streams and polluting the water tables in the area. Of course, there's environmental reparations and all that. So they set money aside, and that's included in the costs. And then there's and that's the environmental fee of 10 cents per ounce, it looks like. And then 0.5% mining environmental fee. So they've got some costs there, all right, that they roll into their books. Now, the all-in sustaining cost calculation for year 2020, this is according to this quick sheet here, and we'll get into the main page for them in a minute. But they've got anywhere from $12.54 to $14.53. So it's come up. Right? If the last time I looked at this stuff, years ago, I remember we did a video. We discussed the all-inclusive cost per ounce sold. We just looked at a couple different mines. I think I have more pulled up today than I did then. So this is going to be like an update on that video. But if you think about that for a moment, $12.54 to $14.53, silver dipped below that miraculously somehow. You can come up with any theories you want on how and why that happened. When supplies were dwindling back in March and the economy took a dip, we saw that brief period where silver not spiked up, but spiked down, and it caved below what even the costs of producing ore and silver at the mine sites would be. And this is not, again, you have to consider this for a minute. Let me explain something when you see these numbers. That's $12.40 to $14.50, or $12.50 to $14.50. That's for like the big giant bars that these mines produce that ship off, and they're not even at that point like 4.9 or 3.9. That's their big roughed out ingots that they're sending to get refined and assayed, I believe, elsewhere. And then again, that's not even breaking those down into plankets, purified, like a 4.9 planket. So if you're holding a coin right now, if any of you in the chat are holding an American Eagle, a Maple Leaf, a Krugerrand, or any bullion piece at all, look at it. You're holding a 3 to 4.9 fine 1 troy ounce of silver. Now, in order to get it to that state, it had to go, again, from the mines, from rough ore, to be pulverized, extracted, melted, smelted, all those things, and then put into these roughed out bars and ingots and shipped typically to an assay office where it's afterwards, after it's been purified, where it's confirmed to be of a certain purity. They're then broke down further into like blankets, the little blanks that produce coins. There's places that make those. And then that has to go to, if there's a place that's making blankets for particular mints, some places do that. They'll make blankets for several mints. They'll ship them out. Those mints will then take receipt or delivery of those blankets and then strike them with their dies and produce the ounces that you typically see and hold as bullion coins, or rounds as we call them. And then they have to be distributed to bullion dealers. And then the bullion dealers would then therefore sell them to you. So there's a tremendous chain of custody and handling. And if you think of the amount of humans, the labor and the shipping and the movement, all of that, and that's after, again, all of that took place essentially after this 1453. So this is, again, when you hear about like spot price, I mean, even a COMEX bar at 1,000 ounces, you're paying more than spot these days. I think it's $1.30. This recently, during the spike of demand, we're still seeing there's going to be costs. You're never going to buy silver like from a miner for the cost that, all of his efforts that he put into it, and just, pay him cash and get a 1 ounce coin. That doesn't happen. It's ridiculous. But you have to understand the costs here, the custody, the chain, all the humans involved. It's incredible, the supply chain for bullion with all metals. I mean, this is the same for copper. The same goes for copper. It's incredible. So then there's other discussions here, and this is a dated one. I'm just going to, for reference, because we just saw 1250 to 1450 here. How much does it cost to mine 1 ounce of silver? This is kind of a general Google search question, right? Obviously, people look it up. Google tries to generate an answer. And this is dated. This is way back, probably around the time we made the last production video on this topic. And this is about 2016, I believe 2017, in this range was when this was produced, this number. And they say 1056 here. Years ago. Again, almost, 8 whatever years ago, 7 years ago. About 11. So, of course, obviously, fuel costs, labor costs, currency devaluation, debasement is going to have an effect on this too, because, of course, as currency is devalued and debased, you're going to see an increase in labor costs, because human labor, currency is a representation of human labor. Ultimately, all money is how much effort. So, miners aren't going to just work and do the same amount of labor that they do. If you saw the screenshot for this video, that's a guy working in a mine. I don't know who wants to do that and get paid less every year. That's going to go up. The costs of that are going to go up.
Clearly, you've never heard of the 7 dwarves.
Oh, the 7 dwarves. Yes, the little miners. We're going to get into, again, I'm going to get into the more historical side of mining when I talk about some silver later on in the future, when we start diving into like the Potosi mine and diving into a mine, no pun intended. And talking about, again, the human toll of mining, what it costs, both in life and quality of life. So again, there's a lot of different links you can find here, and this is Endeavor Silver. We're going to get into that in a minute as well. A lot of different answers to these questions. Now let's go to First Majestics first, since they're first. First Majestic, this is a news release for investors, and I believe this came out this year. This was like January 21st, 2020. It would have been, again, last year, so it's a little bit dated. I don't think that the costs are tremendously different, but going from 2020 to 2021. I'm sure there might be some, just a little bit, obviously with supplies and things, but they talk about their expected production range. Now, again, this was in 2020, so this would have been right before really COVID hit. And as you all know, that's kind of an outside variable. Not every year do we have a global plague that shuts down production and supply. So I would expect, and I truly believe that the supply we're going to see mentioned in some of these as far as 2020 predictions for production are much less than what was actually produced. This was if everything was going good. The company expected a production range between 11.8 and 13.2 million ounces, with total production, including gold byproducts, between 21.5 and 24 million silver equivalent ounces. That's including gold byproduct, and that's okay. If you understand that there, what they're saying is including gold byproducts between 21 to 24 million silver equivalent ounces. So that if you added that all up, even the gold, that's about how much value worth of all the metals they would produce would be about 24 million silver ounces in value at that year's prices, 2020. Now, again, remember, I don't know exactly what happened after this. Obviously, these mines, and we did read about it. We all saw it in the news. They had to shut down. People weren't working. Supply was dramatically impacted this year because of what took place in the Great Plague, we'll call it. Now, what I wanted to get down to here, we're going to go over it real quick. A mine-by-mine breakdown of the 2020 production guidance is included in the table below. Cash costs, can you see that? Let me make sure you guys can see it so I'm not just reading this and you're not able to look at it. I want you guys. Hello, kitty. All right. Cash cost and all-in sustaining costs per ounce. All-in sustaining costs per ounce. Guidance is shown per payable silver ounce. Metal price and foreign currency assumptions for calculating equivalents are silver at $17 per ounce. So that's what this is with silver at $17 per ounce. And $14.50 per ounce, I'm guessing, on gold. Yeah, gold $14.50 an ounce. So obviously those numbers have changed, okay? They have changed since this time, but this is what it was then. So these numbers would be skewed a little bit, obviously. So these are the mines. Let's start with San Dimas. The San Dimas mine looks like silver. They came up with about 6.5 to 7.2. I think this is million ounces. Yes. I think this is 1,000 ounces here for gold. That's what the K is. Let's just go to the costs. Cash costs, $2.47 to $3.62 here, but that's just the overall cash. Now the all-in sustaining costs per ounce gold. This is again for the San Dimas mine, about $8.28 to $10.10. That's just to get this stuff out of the ground and get it shipped and moving. Santa Elena, $9.80 to $11.77. La Encantada, $14.96 to $16.29. Look at their cash costs over here. They didn't even get gold out of this mine. So I think what this is the gold really helps offset some of these mines. You know, they're in there trying to get silver, but if they're hitting a lot of gold ore and producing gold as a byproduct as they're getting silver in a silver specific mining operation, again, I'm not an expert on this, but it's my understanding. You know, you're out there getting silver, looking for silver, and all of a sudden you're getting some gold as a byproduct. It helps offset your costs. If you're not getting gold as a byproduct, if you're not finding gold and you're just getting silver out of the ground, 2.9 to 3.3 million ounces, and that's all you're finding. Because see, that's what the silver equivalent is here. It helps up it if you're finding gold at the same time. That's why the numbers change on the San Dimas and the Santa Elena mine. You notice they're a little bit higher, silver equivalent ounces. Let's just look at the La Encantada mine. They're not finding gold. There's no data for it. So it looks like they only found silver, 2.9 to 3.3. This is why I think it gives us a clearer picture if you're just trying to find silver, what the costs are. Now, their cash costs to just get the silver out of the La Encantada mine. Mrs. Maltby, you speak Spanish. What does that word even mean? La Encantada.
La Encantada?
What does that mean in Spanish? Español. ¿Cómo se dice?
Enchanted with something.
Oh, the enchanted mine. I like it. That's a beautiful word. So the cash costs at the enchanted mine here, $12.27 to $13.29. Think of that.
It can also mean
$12.27, $13.29. Now the all-in sustaining costs for that mine, $14.96 to $16.29. How does that sound, guys? $16.29 an ounce to get that silver out of them, and that's just rough state silver, right? Now it looks like here the average, I guess the total when they do all of this added up and averaged out, you look down here in the bold. If you can look, I'm kind of putting the cursor over it. It looks like 1337 to 1546. That's for the entire First Majestic Mining outfit. 1337 to 1546. So that's kind of that's your base. I mean, one of the reasons I think it's important, and I'll just pause for a second here, to look at these numbers and to every once in a while digest the cost of getting metals out of the ground is, to me, it creates a floor, a base. A lot of people are concerned, like, let's, for example, with a stock. If you're buying a stock in company A and you're buying that stock for $10, well, you don't, what's the real valuation there? I mean, people look at all of these different things like the earnings per share, their dividend, how many shares are outstanding, how profitable the company is, how much debt the company has, the market that they're in, what the future of the company might look like, all of those things, right? And it's difficult to really do some accurate price discovery, in my opinion, with those types of things. And it's a lot of it's opinion and speculation, right? And of course, how long has the company been around? 10 years, 5 years, 20 years? Well, I know that silver's been around for 7,000 years. There's been money for 7,000 years. So I kind of believe it's not going anywhere anytime soon. To me, when I know and understand the costs of human labor, the production, the shipping, all that goes on that I explained earlier in the video, to getting silver out of the ground, to producing silver, and then I see these costs, that creates in my head a firm, if you want to use the dumb chart term, support. A support line, a base, a floor, a bottom. Why in the heck would silver, when you start looking at all these mines all around the world and you look at their production costs, you have to realize if silver dips below that, they're probably going to slow down or stop production. If silver went to $4 an ounce all of a sudden, would these guys produce? Would you go to work for that? No, I don't think that they would, honestly. And I think a lot of times that fact is overlooked. We got a kitty in the background meowing. She's got a little present for us. This creates a floor, a base, a support for silver that I don't think it can go below, and it won't. And it gives you almost a sense of security. And like when you're holding that ounce, again, all of you, I told you earlier when you're watching this, to hopefully you're doing it, to have an ounce. Now look at that ounce in your hand and realize, in my opinion and in yours, at today's valuations and today's currency strengths, it shouldn't go, and it can't, I don't think it can go below the values you see for all-in sustaining costs per ounce sold for these mines. It creates a significant support and strength area, because you're not going to find miners. What, kitty? Come here. Bring your toy over here. You're disrupting things. Okay, here. Let me see it. Okay. Thank you. I'm glad that you brought me your favorite toy, your little pumpkin. Thank you. That's a little disruptive little kitty named Raven. She had to bring a toy in here. She wants attention. Okay, back to this. Back to the support. Back to the baseline for silver. Again, you don't get that with stocks. You don't get like how much did the absolute costs and human labor and effort it took to create like T-Mobile, or although I know they have labor in their company and they have a service they provide and all these things. Maybe that's a poor example. Maybe there's other ones you could use, some useless BS stock somewhere. All I'm saying is, oh, look at Eurigus Delirigus threw down the ant cat emoji for the kitty.
It was little Raven Poe that brought a toy.
Now, some people even would disagree with that position that I have. And I don't really understand the logic behind it, because, again, you have this metal that's been money for 7,000 years that humans are always going to have, need, and use. An expanding and increasing scientific and industrial demand on that very metal. We'll get into that in a minute. I have a slide pulled up and an article about what we often refer to with the environment, the Green New Deal, and the solar panel situation that's coming with silver. And it's been in the news for years. You all are aware of that. But there's this cost and all of this support that I believe exists creates, again, almost like a bulletproof, bomb-proof baseline for where silver should always be valued at, and it can only really go up from there. And again, there's other things like demand. We saw recently an explosion in demand and an absolute diminishment in available supply. Whether or not you believe that, it exists, it happened, I saw it, I witnessed it, and I've talked to a lot of people. Silver, believe me, silver supply is being constricted and consumed at a level we've never even seen before. And that's incredible, it's awesome. Now, there is still a lot of production, but we're going to get into peak production. We're going to look at a year and a date time frame where they actually believe there might not be more silver produced. And it's actually surprising. I learned a lot just in this most recent exploration into me doing some data mining, if you will, to play with these mining puns. It's kind of fun. When I went into the internet, the mine, and pulled out this information, I learned some interesting things. Now back down here, this is certain amounts shown may not add exactly to the total amount. Consolidated AISC includes corporate, general, and administrative cost estimates and non-cash costs of $260 to $290 per payable silver ounce. The company is projecting its 2020 AISC. Okay, that's again the whenever it says AISC, remember what that means. It's the all-in sustaining costs per ounce. Okay. Its projecting is defined by the World Gold Council to be within a range of 1337 to 1546 on a per consolidated payable silver ounce basis. Excluding non-cash items, the company anticipates its 2020 AISC to be within a range of 1254 to 1453 per payable silver ounce. An itemized AISC cost table is provided below. So you've got general administrative costs, total cash costs per payable ounce. That's 576 to 697. Sustaining property, plant, and equipment, $188 to 210. So all of these things can go up. You know, like if, for example, if fuel costs go up dramatically, that plays into this spreadsheet. So all of this, I want you to, do you see this chart here? All of this right here has to be taken into consideration for every single ounce of silver that exists on the planet and that is produced. This is what it costs, and these are the things that play into producing that one singular troy ounce that you hold in the palm of your hand. That piece of silver that has no debt, no liability whatsoever. It owes nobody anything. It's already produced, it's there, and it's in pure state. All of these costs have been paid for, and it exists now, and you're holding it, and you are part of it. You've paid these fees in acquiring that silver, and now it's yours. You've stored your labor, your wealth there after these guys stored and put all their wealth and labor into it to produce it and get it to you, and you transferred and did a transaction, and now you own and hold that wealth. It's pretty incredible if you think about it. It really is. So now there's profit sharing, lease payments, all these costs. I mean, it gets complicated. You know, I can't imagine what the books are like at a mine. I'm glad I'm not one of their accountants. I wouldn't be able to do it. I'm not good enough with numbers. Okay, then there's royalties, mining, environmental fees. We talked about that. And then there's innovation. They have to do improvements as a result of significant improvements in the metallurgical recoveries at Santa Elena following the installation of a 3,000 TPD HIG mill circuit in 2019. I don't even know what that is. The company has elected to install HIG mill technology at its San Dimas and La Encantada mines in 2020 and 2021 respectively. So this improves recoveries, apparently reduces operating costs. That's great. And they have some capital investments for future growth, conference calls, this and that. That's just one mine. Now let's go to, if you can see this, I'm going to bring up Endeavor Silver. This is the 2020 production and cost guidance forecasting for 3 to 3.5 million ounces of silver, 38,000 to 44,000 ounces of gold, and 6 to 7 million ounces of so again, the silver equivalent. That's when you add the silver and the gold produced up together. So let's get this slide and this site up so you guys can see it. I got to make it a little bit smaller because it's there we go, transition that. There you go. Hopefully you can see that now. Hopefully you guys are having fun. I know this is boring, but this is mining. This is what it costs to get your stuff out of the ground.
What is this?
What is this? What is this? What is this? This is Endeavor Silver. Endeavor Silver. So this is a British Columbia mining company, Vancouver. As you know, Canadians are very good at mining. They've produced a lot. Vancouver, British Columbia, January 31st of 2020. Endeavor Silver Corp. Released today, about a little over a year ago, the 2020 production and cost guidance for its 3 silver gold mines. I'm going to have to look for the 2021 stuff and do an update soon, because I haven't seen any 2021 production numbers. I'm going to have to I'll do that later. 2020 production and cost guidance highlights. In 2020, silver production is expected. I doubt they met this, ladies and gentlemen. Again, this is all these briefings and news things coming out from these mines was before they got hit with the Great Plague, the Great Mass Death. In 2020, silver production is expected to range from 3 to 3.5 million ounces, and gold production is about 38,000 to 44,000 ounces. And not very much gold there. Silver equivalent production is forecasted to total around 6 to 7 million ounces. That's if they using an 80-to-1 silver-gold ratio. Consolidated cash and all-in sustaining costs, we just talked about all those, in 2020 are both estimated to be significantly lower than 2019, at around 6 to 7 per ounce of silver and 17 to 18 per ounce of silver net of gold byproduct credits, respectively. Metal price assumptions for 2020 are $17 per ounce silver, $14.50 for gold. So that's what they use as the profit area and the costs, or the values, I guess, at that time when these are put together. So again, looking down here, the all-in sustaining costs of gold by product credits, US per ounce. This is net of gold. So net of gold. And again, this is for silver. Look at 17 to 18. And again, this is all their silver stuff here. 6 to 7 for cash costs. And this is including the gold they find to kind of offset their silver costs. 2020 silver equivalent production is calculated using a gold silver ratio of 80-to-1. Operating the mines. So I'm thinking, if I'm looking at this right, 17 to 18 per ounce of silver net of gold byproduct credits, respectively. And again, these numbers are going to change this year, obviously, and they might not even produce as much. So I'm guessing, if I haven't seen the results yet of 2020, obviously that these mines were unable to meet, I think, a lot of their projections. I do think that's part of the reason we're seeing some of the costs go up in the silver market, is there had to be a shift here because many of these mines slowed down or shut down. And then that's just the mine. That entire supply chain, as we saw, was disrupted with the 2020 situation. Now, cash costs net of gold byproduct credits are expected to be $6 to $7 per ounce of silver produced in 2020. Consolidated cash costs on a co-product basis are anticipated to be $12 to $13 per ounce of silver and $900 to $1,000 per ounce of gold. So the cash costs, these are the operating costs. It's under operating costs here, if you can see that. The cash costs net of gold byproduct credits are expected to $6 to $7 per ounce of silver. That's the case. So the gold helps pay for the silver, of course. And then consolidated cash costs on a co-product basis are 12 to 13 per ounce of silver and 900 to 1,000 per ounce of gold. So this is a good window into just even looking at like some of the gold production costs. And this isn't even a gold-specific mine, but it takes quite a bit just to get gold out of the ground. You know, years ago I remember reading, I believe it was $750 to $800 or something like that in just diesel fuel to get gold out of the ground and produced. Just that side of things, not even human labor and all the other stuff, just the fuel costs. All-in sustaining costs net of gold product credits, in accordance with the World Gold Council standard, are estimated to be $17 to $18 per ounce of silver produced. So the all-in sustaining costs net of gold byproduct credits, this is according to the World Gold Council standard, are estimated to be $17 to $18 per ounce of silver produced. When non-cash items such as stock-based compensation are included, the all-in sustaining costs are forecast to be $16.50 to $17.50 per ounce. So these are some pretty interesting numbers. When you look at this, it gives you an idea, again, that baseline, that floor, that support line for what silver really is. I mean, just to get the stuff in the roughest state out of the ground from a mine, where we're looking at costs being. Welcome, Mimaru. Thank you. Good to see you. And she's a new member. Oh, she just became a member. Mimaru is part of Mrs. Maltby's Hobo Nickels. Wow, excellent. Welcome. Our newest member, Mimaru.
Mimaru is one of my favorite Canadians.
Yeah, that's right. A Canadian. Yes. I like it. We're just talking about a Canadian. We're talking about a Canadian mine, Mimaru. So the management assumed a $17 per ounce silver price, $14.50 gold price, and 20 to 1 Mexican peso per U.S. silver dollar exchange rate. Okay, and the direct operating costs, okay, we didn't see that, are estimated to be in the range of $85 to $90 per ton. And all of this, again, could have changed and most likely, I think, was quite different. Down here, it has the mines with their total capital and investments for the different mines: Guanacaste, Bonitos, Ocampas, exploration budget, again, projects, drilling, drill meters, expenditures. I mean, all of these things take into consideration what a mine's operations. I mean, think of it. They're having to explore, always going deeper, bigger, expanding. Once that silver is exhausted in one spot, they got to go to another. It's not always in the same place, and it gets exhausted quickly. And of course, modern mining and modern efficiency of mining has absolutely changed the situation with how quickly mines are exhausted and silver. Now, let me get this this article pulled up here. Coming up just here in a minute. Let me get this one pulled out. This is HECLA. Make it to where you guys can see it a little bit better. All right, HECLA lists revised 2020 gold silver output cost guidance. This was from Kitco, and this was in May. And again, things changed a little bit, I am sure. You can see HECLA Mining. This was, I think this is updated, or it's a photo from it. The company now projects full year silver output of 10.9 million to 11.9 million ounces, down slightly from 11.1 million to 12.1 million originally. Gold production is now forecast at 195,000 to 208,000 ounces, compared to the original guidance of 212 to 225. So here's the thing. I don't think these numbers were met. These were forecasts. These were what they thought they were going to do in 2020. And I truly believe all of these mines that had forecasts in 2020 were let down. They were disappointed because of the events that transpired. But we want to look at what their costs, what they thought the costs were. Again, this is a year ago. I think they've come up. Guidance for all-in sustaining costs for silver after byproduct credits. So that's, again, that's finding copper, finding gold, finding other stuff that they sold off. Has been revised to a range of $12.25 to $13.25 an ounce. This is from HECLA. That's up from $11 to $12.25 originally. So this is the guidance for all. Think of that, $12.25 to $13.25 an ounce. The all-in sustaining costs for gold was left at $11.50 to $12.50 an ounce. So again, remember when I said years ago when I made videos on this, even this year, I said, you're never going to see gold below 1,100 again. It's never going to happen. It's not going to happen. You're done. Sorry. It crossed 1,000, never went back. You're never going to see gold below certain amounts again. The human labor, the effort, the machinery required, the environmental costs required, the shipping, all that stuff, you name all the stuff that we talked about at the beginning of this video, because again, this kind of translates into gold as well. The AISC for gold, $11.50 to $12.50, that was a year ago. You're never going to see gold down there again. That's done. No one's going to go dig up gold and give it to you and not make a profit on it. Who wants to go work in a hot, blistering mine, risking collapse and death and all kinds of lung issues and all the things that we talk about? And it's the disaster. I mean, it's not comfortable, my friends.
609, I don't think he's here in the chat anymore, but he mentioned that his wife's father died in a mine.
It's incredible. Yeah, mines consume men. The Potosi mine was nicknamed the mountain that eats men because 100 miners could go in and none would come out.
So it must be a female mountain.
Finally, we are able to reestablish production and cost guidance. Baker said our silver production guidance is largely unchanged with the AISC after byproduct credits about 10% higher due primarily to benchmark smelter costs and lower byproduct credits from lower zinc production and prices. So if they're not getting zinc or zinc prices drop, they're not getting that offset and it's going to cost more. Again, if you're just going after silver and there's no byproducts, it's extremely expensive to just get silver out of the ground. Our gold production guidance is about 10% lower, but AISC after byproduct credits is relatively unchanged due to lower capital costs. And then there's a bunch of other accounting information in there I don't really need to get into. The average realized silver price is what I want to show you. In the first quarter of 2020, So this is a little more recent. This is because this is the first quarter of 2020. The average realized silver price in the first quarter of 2020 was $14.48 per ounce, which is 8% lower than the $15.70 price realized in the first quarter of 2019. So they got a little better. Realized gold prices were higher by 21% to $15.88 an ounce, while lead and zinc prices were lower by 16%. The AISC for silver after byproduct credits were 1106 an ounce. AISC for gold 1302. 1302 just to get the gold, but 1106 for silver. And again, this is with all the machinery and infrastructure, roads, mining, let's put it this way. You yourself and a team of 100 guys would not be able to set up the infrastructure, get a mining company going, and go out there and get silver out of the ground for 1106. This is with maximum efficiency with established mining company to get that out of the ground for that. You're not going to do it. You couldn't pay me $100 an ounce to get silver out of the ground and I wouldn't be able to do it profitably. It wouldn't happen. None of you would, because of what it takes. Again, the human labor. Back in the day, in history, years ago, it was very difficult. It took a man a long time to just get a drachma or denarius worth of silver out of the ground in the ancient days. This is only possible because of the efficiency of today's equipment and things. Financial position was strong. The company has put option contracts for gold and silver to establish a floor price. Look at this. Establish a floor price of $16 for silver in the second quarter and $14.50, $16.50, $1,600 for gold. So there you go. That's the floor price of those metals per hecla. That was just hecla. What is the current cost to produce an ounce of silver today? This is another piece of information, but this is old. This is dated. This was 1056. Now, this was according to the Silver Institute, 2016, 2017. A little bit dated. But again, I just wanted to show you that for a long time, it's been in that range. For thousands of years, mining silver was not much different than mining copper or zinc or gold or iron. Past prospectors and exploration companies sought out silver deposits, set up mines to pull the silver out of the earth and then shipped it to a refinery. Gold and copper and zinc and iron get mined this way. But by the 20th century, however, silver mining changed. A relatively small percentage of silver originates from traditional silver mines, approximately 25 to 33% depending on the year. Nowadays, most of the world's silver comes from mines that focus on other metals. For example, a zinc mine in Mexico may pull out 65% zinc, 25% silver, and 10% lead. Since this mine would categorize as a zinc mine, the silver production is referred to as a byproduct metal. Most new silver is byproduct. Something to consider always. But again, it costs them to get it out of the ground, and it's not like they're doing it for free, and the silver's just showing up. And not all mines have the same cost of production as we've discussed before, because labor and just there's all different types of variabilities. But there's some interesting information in this article. This is from AmericanBullion.com. Silver deposits are not homogeneous. One mine near Lake Tahoe might be relatively easy to access, while another in Central America could face environmental and political challenges. That's why it's safer to look at a range of silver production costs. Let me get this to where you can see it better. There you go. Safer to look at, okay, where did I leave off? Rather than pegging a single number. Core mining is renowned for aggressively pursuing high-cost silver mines. For years, Core saw AISC above the $15 per ounce threshold. Other companies might report AISC of 9 to 12 per ounce. Much depends on the company's operating efficiency, its capital equipment, the regulatory environment, the earth or water surrounding the mine, as I discussed earlier, and accurate exploration. Moreover, single companies and single mines often experience large fluctuations in cost. take the following excerpt from the American Silver Corporation's production costs and guidance publication. So here you go. This is a big table, consolidated results and guidance. This is 2015, 2016, 2017. Again, this is dated, this is old, this is past. This is a while ago. Silver production, here's the 2.6 million, 2.39 million, 2 to 2.5 million. This is the equivalent, silver equivalent, because again, they're finding gold or other metals, and this is all of the profits, if you converted it into metal, what they're producing. Silver cost of sales, 10, 9, 8 to 10. So all about that $10 range. Silver cash costs, 12, 10, 4 to 5 down here for 2017 with that one. Silver all-in sustaining costs, anywhere from $17 an ounce, $12.71 an ounce, and $9 to $10 an ounce. Not cheap. Again, this is years ago. I mean, we can say 2017 is years ago. This is 6 years ago for 2015. Lots changed since then. Why silver production cost tends to follow spot prices. Silver mining can be a tough business. The geological challenges are obvious. Miners need to break apart the earth, find the rare metal, extract it, and move it. The economic challenges are obvious. Nobody can long operate a mine with AISC higher than the spot price of silver. Again, if it costs you $20 an ounce to get it out of the ground, you're not going to do it. You're just not going to do it. It's stupid. It's a dumb investment. No one's going to give you money. The investors are going to flee, and you're not going to work for free. Who works for free? You ever met a volunteer miner? I don't think so. Silver companies, especially publicly traded ones, and most silver miners trade publicly, face pressure from investors to expand their operations every time the silver spot price rises. Similarly, they demand cost reduction methods whenever silver falls. It's for this reason that most silver production costs tend to follow spot prices. When silver costs $24 an ounce, most mines saw AISC around $21 to $23 an ounce. Let's pause for a second, because right now, what is silver? Give me a quote. It's like 26 to 27, right? If that's the case, that means silver mines are probably spending $25 an ounce to get it out of the ground. Okay? And a lot of things have changed. Labor costs, again, all the other stuff. Healthcare for miners. We've got healthcare problems now, right? We've got the mandatory things with that. When silver costs are $24 per ounce, most mines saw the all-in sustaining costs of around $21 to $23 an ounce. My guess is that that's what we're going to see this year. When silver prices fell to $20 per ounce or $17 per ounce, costs fell accordingly. And again, there was a lot of problems this year. I mean, I don't know how they're going to figure these numbers out with what took place back in March. It's impossible for me to really understand what took place then. Here was another article from Yahoo. This was, again, Endeavor. And this was a report on what we talked about just moments ago. And I just wanted to cover real quick. Where was it? The report on that. Again, we talked about the 80 to 1. We covered this article. Here it is. Metal price assumptions for 2017 to 1450. And again, this was essentially the same article, but it was in Yahoo Finance reporting what Endeavor Silver produced back here, what we talked about already in more detail. Now here, I've got pulled up for you another piece of information. Is silver production declining? This was interesting, right? As notable, Poland's reserves declined. Okay. The timing estimate range, this was the biggest one that jumped out at me right here, if you can see this. What year will silver run out? You never really consider that. I never thought of that, actually. I don't ever think of, like, hey, when's silver running out? Obviously, there's a fixed amount in the Earth's crust and in the planet. So there must be a date somewhere if we kept up the production in the way we do it. The timing estimate range for peak silver production is narrow, in the range of 2027 to 2038. We're getting pretty close to that for peak silver. Some people say we've already hit it. I know that. I've seen charts that kind of may or may not prove that. The best estimate's about 2034. Getting close. But check this out. This is crazy. By the year 2240, I won't be here then. All silver mines will be nearly empty and exhausted. Have you ever thought of that? That's an interesting date. That's crazy. let's read it again. By the year 2240, all silver mines will be nearly empty and exhausted. Could you imagine being a human? I would love to jump in a time machine, pop out in the year 2250 when all the mines are empty and they don't have any more silver, and be like, hey, what's the price of silver these days? And they're like, it's like $1 billion an ounce, dude. We need it for energy, man. I can't imagine how dumb people will be in that year. I don't even want to think about it. But there you go. That's something to consider. I never really put a date. I never considered the date of when, like, hey, there's no more silver in the mines, ladies and gentlemen. It's over. What exists is what exists. That's it. We reached it. Something to think about. And it's getting harder and more expensive all of the time. All the time. Doesn't get cheaper. Here we go. USGS 2021 report. Silver reserves and production declining. Speaking of what we just read, this is from Seeking Alpha. Can you guys see it? Let me get the slide. Make sure the slide's shown up just so you guys can read it. I got to make sure you guys can see what we're talking about. Otherwise, I'm just talking to myself. So it takes me a second to get the screen set up for you. Here's the USGS 2021 report. Silver reserves and production declining. This is from February 2nd. This is more recent news. U.S. Geological Survey reports decreases in silver production and reserves. Silver reserves and silver production decreased in Peru and Poland. Primary silver production is declining rapidly. Most of the silver is produced as a byproduct from copper and zinc and lead. Each year, the U.S. Geological Survey publishes a report on world mine production and reserves. As precious metals investors, we are especially interested in the silver segment of this report, which gives us extremely valuable information on the supply side of the silver market. This is imperative to read and understand. This is important. Here's a 5-year silver chart. Ba-ba-boom. Ba-ba-boom. The silver price has risen 50% since last year, ever since the Federal Reserve kept interest rates at 0% while increasing its balance sheet by 75%. It is expected that another $4.5 trillion of stimulus will be unleashed over the next few years. They're doing $2 trillion right now. Silver's going to skyrocket, ladies and gentlemen. I don't care what anybody else says or believes. So that should boost both the silver and gold. I mean, these, again, multi-decade bull run, precious metals where it's out, send money. We know the drill. You know the drill. You know the thing. You know the thing. To quote Biden. So that should boost silver investment demand. On top of that, the recent buying frenzy from Wall Street Bets community has pushed the amount of ounces in iShares Silver Trust to a record high. Now, they got to get that physically. They just bought paper. On the other side, the new trend of electrification, electric vehicles, 5G, solar panels, green energy, will add to fabrication demand. When we look at the supply side of the silver market, we observe that most of the silver supply is produced as a byproduct from base metal mining. This is a new trend that has started a few years ago as primary silver production declined while base metal byproduct silver production increased. 32.1% of silver production comes as a byproduct of zinc and lead mining, as we just saw earlier, while 22.8% comes as a byproduct of copper production. Thus, 54.9% of global silver production is a result of copper, zinc, and lead production. Get it? Good. Silver mine production by source metal. There's a pie chart here. You can see it. Orange represents lead and zinc. So 32% of it comes from lead and zinc mining. Looks like gold mining results in about 15.8% of silver production. Primary, so just going after silver, is about 28.7%. And then you've got gray here. That's copper. 22.8% of silver mine production by source metal from copper. And then other is blue, 28.7. So that's just like, I don't know, finding other stuff. Uranium or whatever else, probably every other metal that's on the planet they're looking for. Rhodium, palladium, platinum, you name it. Statista reported that silver coming from primary silver miners decreased significantly in 2019, and this trend is going to continue going forward. Primary silver miners have enormous problems with declining ore grades, and this is starting to show up in the numbers. Also, very important to note is that declining primary silver supply only has a minimal effect on the silver price because most of the supply is coming from base metal byproduct, about 54.9%. We are seeing a recovery in demand for base metals this year due to the reopening of the economy. For example, copper rose 75% from its low in 2020 when it took a big hit after the announcement of the coronavirus outbreak in China. Due to the lockdowns, the Chinese tourism sector has completely collapsed, and this led to a massive trade surplus for China as the services trade deficit has disappeared. All of this extra saved money was used to invest in commodities like copper, nickel, silver, gold, iron, and oil. There's 5-year copper spot price. Look at that. Off the charts, as you've seen, we've talked about with the penny. Although demand for base metals is improving, I don't expect that supply for base metals will be rising that fast because it is difficult to bring these mines into production, as these are very large projects. The grades of these mines is also decreasing going forward. For example, copper supply and silver byproduct supply is most likely to grow slowly in the coming years. As a result, silver byproduct supply coming from copper mines won't be increasing as much. Silver byproduct supply from lead and zinc mines is rising, while silver byproduct supply from gold is forecast to decline. According to Barrick Gold's PDAC 2020 presentation, gold supply and silver byproduct supply will decrease over the coming years. Here's a chart from Barrick showing that very fact, just dropping. The 2021 USGS report shows that silver production and silver reserves have peaked. This is according to the U.S. Geological Survey. See the charts below from the U.S. Geological Survey. Mexico and Peru are still the 2 largest silver producers in the world, and Peru is the leader in silver reserves. However, Peru's silver reserves declined from 120,000 to 91,000 tons. Also notable is that Poland's reserves declined from 100,000 to 70,000 tons. That's 30,000, 30%. Total silver reserves declined 14% to 503,000 tons. It looked like 2014 was the year of the peak silver production, 2014. Total silver production declined from 26,500 tons per year in 2019 to 25,000 tons per year in 2020. When we extrapolate the charts, we can estimate that silver will be depleted in about 20 years, if not sooner, as the average mine life of a silver mine is currently only 10 years. So this is from Seeking Alpha, and they're taking in a lot of different data, and I often tend to trust them more than most sources. So consider that for a minute. All of you who are now tuned in and watching this, we just read that they're estimating that silver could be depleted in 20 years, if not sooner. World mine production and reserves. Reserves for Australia, Peru, Poland, and the United States were revised based on information from government and industry sources. Here's the reserves. Here's silver reserves in tons. A lot of charts, a lot of data. All kinds of little dots and lines. Let's take a closer look at the 3 largest producers, Peru, Mexico, and China. During 2020, we saw that Peru's silver reserves declined 25% year over year to 91,000 tons. On the production side, Peru has been doing well since 2013. Peru's silver production decreased 12% year over year to 3,400 tons per year in 2020. Continuing onward, base metal production from Peru. Now let's look at Mexico. Silver production declined 5% year over year to 5,600 tons per year in 2020. And there's a chart showing us that silver reserves are unchanged at 37,000 tons. The 3rd largest producer of silver is China, and they had a nice comeback in 2018-2019. Silver production in China comes primarily from a byproduct of lead and zinc. However, silver production for 2020 was down 7% year over year to 3,200 tons. Silver reserves were unchanged, 41,000 tons. Very interesting information, my friends, taking place. A lot of different information to digest with where silver's going. And then there was a large PDF I came across in all of this. Don't worry, we're almost wrapping up here. Investigating the sustainability of the global silver supply and reserve stocks in society and market price using different approaches. So this is an entirely different piece of information. And it's more exhaustive. They collected a lot of data. And of course, the Hubert's model was run for the period of 6000 BC to 3000 AD. The silver system dynamics model run for the time range 1840 to 2340. Very, very exhaustive amount of material here. This is actually, this paper, I should probably just, in order to do it justice, would be to do an entire video on just this piece of information and save it. And I probably will have to save this piece because there's just too much to cover. I'll just briefly touch on parts of it. Our hypothesis is that the price of silver and its physical availability can be modeled based on a systemic mapping of silver flows in the world silver trade system, and an assessment will show the risk for shortage of silver expressed as decreased production and increased prices to be significant in the next 30 years. So I'm just going to read their hypothesis here for you. We evaluated the silver supply for the whole globe in a generalized way and include simulations that cover both the short term and long time into the future, giving simulations covering the time span of 500 years, 1840 to 2340. To undertake this task for silver, we pulled into the picture the availability of fossil fuels, the size of the human population of the future. This was done by using a preliminary version of a global civilization model presently under development. The world model, Sardrup et al. 2013. Previously, authors have published some estimates of quantification of when a peak in silver production may occur, but none have ever done any integrated systems modeling on the issue. References of earlier work that we build on include Ragnar Dotter, 2011, and Sverdrup et al. 2013, who gave the peak production year 2032. You see that? 2032 peak silver production based on a simple analysis with the Hubert's peak production model. Published a report on the internet. He gave the peak year of 2031, indicated peaking of silver production between 2030 and 2040 based on burn-off estimates. So even if you don't read this entire document and look at all of the information of all the mines, I mean, they have like formulas in here, all these like, this is the kind of stuff I don't get. All this stuff here. There's a big formula there. I didn't pay enough attention in class to get what that means. Physics Hypernova could probably break this stuff down. But just long story short, all of this data, all of these numbers, their hypothesis is that we're looking at peak silver in the 2030s. Without having to go through all of this information, all of the science, all of the numbers, all the math. There's a lot of math. Check this out. This is kind of cool though. Time period, tons of silver mined from 3000 to 600 BC. Total 56,000 tons. That's it. From 3000 to 600 BC. From 600 BC to 1000 BC, 75,000. And then look at this. 2004 to 2013, 157,000 tons mined. Cumulative 1509. So I believe that's the total, of all of human history would be 1,500,000 tons of silver ever mined. That's the total. That's a pretty interesting number, 1509, from all of time till 2013. The very interesting article though here on this, and again, just goes to show you though how long. How long humans have been mining silver, essentially since the beginning of time. And now we get to exist in a time period we most likely will live to see peak silver. And again, this is a very long, lengthy article. This is more of a research paper, a PDF, showing us peak silver production of silver. And again, here you can see it right here. Look at this. World production, silver model, Hubert's model. All of it kind of converging right around 2030 as peak silver. And then the last thing we saw was what, 2240 was down here somewhere where there was no more silver left on the planet. On the planet. Physics Hypernova says he likes math. Well, you can break this article down then, man. You can look it up. It's called sciencedirect.com/science/article. And a lot of numbers. I'll put the link maybe in the description. You could find it. And then there's silver lost. Of course, there's everyone knows about silver. How much tons of silver are lost or missing due to various causations. But again, very interesting piece of paper. Very interesting information here. The amount of data that supports their hypothesis that we are running out of silver and that it's gone and it will be gone is, well, I can't argue with it. I'm not smart enough. Are you kidding me? Like when a guy presents this to me and says, hey, we're running out of silver and this is the date, I'm not going to probably have enough information to argue with these guys. I'm too stupid. I'm just too dumb. I'll take their word for it. I will take their word for it. They've got a lot of research. They put a lot of time and energy into coming up with these numbers. And let's just go. Investigating the sustainability of the global silver supply, reserve stocks in society, and market price using different approaches. That's it. I'm going to close out with this. Goldman Sachs, silver's a turbocharged version of gold due to use in solar panels. Goldman's, so this guy just likes it because the new move towards sustainable energy, solar panels, all that clean energy stuff. So long story short, he likes silver because of that. I don't really care. I already knew that. I think you already knew that. We already knew that. That's it, ladies and gentlemen. That concludes today's discussion. Peak silver, production costs, what it takes to get the stuff out of the ground. What are we looking at in the future? I hope you guys had a very interesting and fascinating look at today's discussion. I know it was boring. I know this isn't like the most riveting information. But next time someone tells you, silver's not worth anything, just smile, and think, well, I don't think so. I think it is. I think it is worth something. It's been money for 7,000 years, and we're running out of it quickly. As a matter of fact, we've reached peak silver. That's it. I think we're going to conclude today's live. I'm glad you guys were all here for it. Thanks for participating. Every time you hold silver in your hand, maybe turn this on and check it out. Take a listen to it when you're holding silver. And I know when I get my silver that I ordered recently during this recent events, I can't wait to just have it in front of me and realize I've got that stuff taken off the market. Because if you don't hold it, you don't own it. I will hold silver. Something that's running out. Something that's losing supply every year. There's less of it, less produced now. And eventually it will be exhausted. And the numbers will change. The numbers for silver, the amount that's out there, the number can only change, right? And let's just real quick, before we close, let's go to silverprice.org. We'll take a look at the chart. Take a look at it today. Let's see what's going on. We'll see some movements, huh? Looks like we're back in the saddle again. Back in the saddle again. Here it comes. Let me bring it up for you. It's coming. Give me a second. Give me a moment. It's coming. There we go. Looks like we're hanging around 26.94 currently. Looks like we briefly touched, what was the high today? 27. So we hit 27.05 earlier. Keep it up. Keep that buying pressure on. Everyone's like, it's crashing. Silver's crashing. Silver's crashing. And there's a chart. That's your day chart for silver. Let's go to a 1-year chart. Let's see if it's crashing. I'll bring a 1-year chart up. You tell me if you think it's crashing real quick, okay? Come on. You can do it, computer. You can do it. There you go. There's a 1-year chart. Higher lows, higher highs. 2-year chart. There's a 2-year chart. Looking good. Let's do a 5, huh? 5-year chart. Oh, look at that. That's a 5-year chart. Ba-ba-da-ba-da. Boom. Boom. Do a 10-year chart real quick. Of course, there we are. There's 2011. That's that peak we hit. Look at this. Check it out. We're not even there yet. It's going to retake that. We will see it retake that. 48.58. Think of that. There's people that bought right there. $48.58. It's going back. You know it. You wait till the dollar goes away. You wait till the dollar, when they finally kill it and give it that coup de grace shot. When they finally put the dollar down and it's, it's over. There's going to be a lot of changes. These numbers are going to, these are numbers, these are the numbers we see with a dollar that people still believe in. You wait till the faith is finally shaken and people no longer believe in the dollar. Then you'll see movement like you've never, ever considered or believed possible. All right, ladies and gentlemen of the Junius Maltby channel, I'll close out by asking you to hit the like if you enjoyed today's content. If it was worth it, if you enjoyed this, hit the thumbs up. If you care to share it, go share it. Hey, go share it on Wall Street Bets or Silver Reddit, some silver forum, so they can see peak silver, production costs, have an idea of what it costs to get silver out of the ground, to mine it, to work on it, to refine it, ship it, to make a coin out of it, a bullion round, a bar. It's not easy. It's not easy. So hit the like, hit the share, hit the subscribe. If you're new here, subscribe. Hit the notifications if you want to be notified when there's a live like this or any type of broadcast for that matter. Join the community. Check out the community tab on the channel and you'll see where I post articles, links, pictures, jokes, whatever, content. Thanks for participating, being part of the Junius Maltby channel, the community here. And I appreciate all of you that were in the chat participating. And all of you have a good rest of your night. I will put links down below. As always, there's sometimes it actually helps the channel. I was able to establish some links with SD Bullion, JM Bullion, and Buy Gold and Silver Coins. Those are my 3 favorite, as well as Money Metals Exchange. So those are the 4 places that I've really looked at. They have the best prices. Oftentimes, BGASC has some of the best prices with metals. And I put those links down below. So if you're ever interested in buying metal, and it doesn't affect you any, it doesn't cost you any more, but it does let them know that you found out about their bullion dealing through this channel. And they reward me just a tad. I mean, you're talking pennies on the purchase. It's kind of like a view with a YouTube thing. And ever since YouTube started wrecking me and shadow banning me for my political views and burying my channel, it kind of helps up make the difference. It's where I buy my precious metals from. And if you're into buying precious metals, go ahead and check out the links that are on some of the videos recently, and you'll see ways to go in and explore my favorite bullion dealers, the 4 of them. Take care. Have a good rest of your day, all of you, and be well.